Number 10. Overleveraging. I decided to start a small business selling novelty socks online. Why socks, you ask? Well, who doesn't love a good pair of socks, right? So, I invested my hard-earned money into buying a bunch of quirky, colorful socks, convinced that I was onto the next big thing. But here's where the trouble began. Instead of testing the waters with a small order, I went all in and bought a massive inventory of socks. I mean, I was convinced that the world was just waiting for my funky designs. Spoiler alert, it wasn't. As I sat there, surrounded by boxes of unsold socks, it dawned on me, I had made a huge mistake. I had overleveraged myself, thinking that more inventory meant more sales. Instead, I was stuck with a mountain of socks and a mountain of debt. But wait, it gets better, or worse, depending on how you look at it. Not content with just one bad decision, I decided to try my hand at trading. I thought, hey, if I can't sell socks, maybe I can make some quick cash in the stock market. Oh, how wrong I was. I started trading stocks like I was playing a game of roulette, betting on this company and that company, hoping for a big win. Spoiler alert, I didn't win. In fact, I lost. Big time. It turns out, trading stocks is a lot harder than it looks, especially when you're as clueless as I was. So, there I was, drowning in a sea of socks and sinking in a pit of bad stock picks. But did I give up? Of course not. I was determined to turn things around, even if it meant eating nothing but ramen noodles for the next year. I started by liquidating my sock inventory at rock-bottom prices, just to recoup some of my losses. Then, I took a long, hard look at my trading strategy, or lack thereof, and decided to educate myself. I read books, watched videos, and even took a few online courses on trading. Slowly but surely, things started to turn around. I started making smarter trades, avoiding risky investments, and, most importantly, not overleveraging myself. I learned from my mistakes and vowed never to repeat them. Number 9. Poor investment choices. I, with my newfound love for all things entrepreneurial, decided to dip my toes into the world of real estate. Real estate is a safe investment, they said. You can't go wrong with bricks and mortar, they said. Well, they were wrong. I set my sights on a charming little fixer-upper in a trendy neighborhood, convinced that with a little elbow grease and a lot of Pinterest-worthy renovations, I could flip it for a tidy profit. So, I poured all my savings into buying the property, ignoring the little voice in my head that said, maybe this isn't such a good idea. As it turns out, that little voice was onto something. The renovations ended up costing way more than I had budgeted for, and the market took a turn for the worse, leaving me with a property that no one wanted to buy, no matter how many shiplap accent walls I installed. But did I learn my lesson? Oh no, I was just getting started. Emboldened by my first foray into real estate, I decided to try my hand at day trading. How hard could it be? I thought. Spoiler alert, it's harder than it looks. I started throwing money at every stock that caught my fancy, thinking I was the next Wolf of Wall Street. I ignored all the advice about diversification and risk management, convinced that my gut instincts were all I needed to make it big. Needless to say, my gut instincts led me astray. I ended up losing more money than I care to admit, chasing after hot stocks and buying into dubious companies with questionable business practices. I was like a kid in a candy store, except the candy was sour and left a bitter taste in my mouth. So, there I was, broke and disillusioned, with nothing to show for my adventures in real estate and trading. But did I give up? Not a chance. I dusted myself off, took a hard look at my mistakes, and vowed to do better. I started by educating myself about the markets, reading up on investment strategies, and seeking advice from professionals. I learned about the importance of research, patience, and discipline when it comes to investing. And slowly but surely, I started to rebuild my financial future, one cautious investment at a time. Number 8. Market volatility. in my infinite wisdom, decided to dip my toes into the stock market. Investing is easy, they said. Just buy low, sell high, they said. Well, they clearly hadn't met me. I started off with a small sum of money, thinking I could outsmart the market and make a quick buck. Spoiler alert, I couldn't. The market had other plans for me, plans that involved wild swings and heart-stopping drops. Every day was like a new episode of a soap opera, with the market playing the lead role and me, the hapless investor, watching from the sidelines. One day, my stocks were soaring, and I was planning my early retirement. The next day, they were plummeting, and I was counting pennies to buy my next meal. But did I learn my lesson? Of course not. I was hooked on the thrill of the chase, the adrenaline rush of watching my investments rise and fall like a yo-yo. I started making riskier bets, thinking I could time the market and come out on top. Spoiler alert, I couldn't. The market volatility was like a whirlwind, sweeping me off my feet and tossing me around like a ragdoll. I was at the mercy of forces beyond my control, and it was a humbling and expensive experience. But here's the kicker, despite all the ups and downs, I never lost faith. I knew that with the right approach and a little bit of luck, I could ride out the storm and come out stronger on the other side. Number 7, failure of small business. I decided to start a small business selling artisanal pickles. Yes, you heard that right, pickles. I thought I had found my niche in the market, a unique product that would fly off the shelves. Oh, how wrong I was. I poured my heart and soul, and a hefty chunk of my savings, into this pickle venture, convinced that I was onto the next big thing. I spent hours perfecting my pickle recipes, sourcing the freshest cucumbers and the finest spices. I even hired a graphic designer to create a funky logo and catchy slogan. I was ready to pickle the competition. But alas, the pickle gods were not smiling down on me. Despite my best efforts, my pickles just didn't sell. Maybe it was the market saturation, or maybe people just weren't as passionate about pickles as I was. Whatever the reason, my business was floundering, and I was left with shelves full of unsold jars and a sinking feeling in my stomach. But did I throw in the towel? Not yet. I tried everything to revive my pickle empire. I lowered prices, ran promotions, even tried to pivot into other pickled products like sauerkraut and kimchi. But no matter what I did, I just couldn't turn things around. It was like trying to sell ice to an Eskimo. I was fighting a losing battle. In the end, I had to face the harsh reality that my pickle dream was over. I had to close up shop, lick my wounds, and admit defeat. It was a bitter pill to swallow, but it taught me some valuable lessons about business and humility. Number 6, mismanagement. Me, full of enthusiasm and armed with big dreams, I decided to start a small business selling pet rocks. Yes, you heard that right, pet rocks. I thought I had stumbled upon a stroke of genius, a product that was both quirky and nostalgic. Oh, how wrong I was. I poured my heart and soul, and a hefty chunk of my savings, into this pet rock venture, convinced that I was on the cusp of a major breakthrough. I spent hours scouring beaches for the perfect rocks, painting them with cute faces, and packaging them in adorable little boxes. I was ready to rock the market. But alas, my enthusiasm blinded me to the realities of running a business. I was so focused on the creative side of things that I neglected the basics of business management. I failed to keep track of my expenses, didn't set a budget, and had no real marketing strategy. I was flying by the seat of my pants, and it was only a matter of time before I crashed and burned. As sales started to trickle in, I realized my mistake. I was spending more money than I was making, and my business was hemorrhaging cash. I tried to course correct, cutting costs wherever I could and ramping up my marketing efforts. But it was too little, too late. The pet rock craze had come and gone, leaving me with a warehouse full of unsold inventory and a mountain of debt. But did I learn from my mistakes? Not immediately. I was stubborn, convinced that with just a little more effort, I could turn things around. Spoiler alert, I couldn't. In the end, I had to face the harsh reality that my mismanagement had led to the downfall of my business. Number 5, scams or fraud. I decided to invest in a promising new venture that seemed too good to be true. Spoiler alert, it was. I stumbled upon an investment opportunity that promised sky-high returns with minimal risk. The company claimed to have a revolutionary new product that was set to take the market by storm. All they needed was a little bit of capital to get off the ground, and in return, investors would reap the rewards of their success. It sounded like a dream come true. Blinded by the promise of easy money, I didn't do my due diligence. I didn't research the company's track record, investigate their claims, or even read the fine print. I was so eager to jump on the bandwagon that I didn't stop to think that maybe, just maybe, it was all too good to be true. As it turns out, it was. The company was a scam, a cleverly disguised scheme to defraud unsuspecting investors. The product was non-existent, the promises were empty, and the money I had invested was gone, vanished into thin air. But did I give up? Not a chance. I was determined to get to the bottom of this. I hired a team of investigators, dug through mountains of paperwork, and uncovered the truth behind the scam. It was a long and arduous process, but in the end, I was able to recoup some of my losses and bring the perpetrators to justice. Besides the fact that if something sounds too good to be true, it probably is, it's important to approach investment opportunities with caution and skepticism. Do your research, ask questions, and don't let greed cloud your judgment. And remember, even when you fall victim to a scam, there's always a chance to fight back and reclaim what's yours. Number 4, lack of diversification. I decided to dive headfirst into the stock market. Diversification is for the weak, I thought. I'm going all in on this one stock. Spoiler alert, big mistake. I had heard stories of people striking it rich by betting big on a single stock, and I was determined to join their ranks. So, I took all my savings and invested it in a promising tech company that I was sure was going to be the next big thing. I was so confident in my choice that I didn't even consider spreading my investments across different stocks or asset classes. After all, why diversify when you found the golden goose? But as luck would have it, my golden goose turned out to be a dud. The tech company's stock tanked, wiping out a significant portion of my savings in the process. I was devastated, kicking myself for not heeding the age-old advice of, don't put all your eggs in one basket. But did I learn my lesson? Not immediately. I was determined to recoup my losses, so I doubled down on my investment, convinced that the stock was due for a rebound. Spoiler alert, it wasn't. The stock continued to plummet, and I was left with even less than when I started. It wasn't until I took a step back and assessed the situation that I realized the error of my ways. By putting all my money into one stock, I had exposed myself to unnecessary risk. I had ignored the basic principle of diversification, which is to spread your investments across different assets to minimize risk. In the end, I had to swallow my pride and admit that I had made a grave mistake. I sold off what was left of my investment and vowed never to make the same error again. I diversified my portfolio, spread my investments across different stocks and asset classes, and took a more cautious approach to investing. Well, besides the fact that putting all your eggs in one basket is a recipe for disaster, it's important to approach investing with a diversified portfolio and a healthy dose of humility. Don't let overconfidence or greed cloud your judgment. And remember, even when things seem bleak, there's always a way to bounce back. Number 3, ignoring advice. I decided to take the stock market by storm. I had friends and family members who had been successful investors, offering me advice and guidance along the way. But did I listen? No. I was convinced that I knew better, that I could beat the market with my superior instincts and gut feelings. So, I dove headfirst into the stock market, buying and selling stocks based on nothing but my own intuition. I ignored the advice to diversify my portfolio, thinking that I could pick the winning stocks and ride them to riches. I scoffed at the idea of setting stop-loss orders, convinced that my picks were infallible. But as the market ebbed and flowed, my fortunes took a turn for the worse. My hand-picked stocks started to underperform, and I found myself in a sea of red. I was losing money left and right, and my pride prevented me from admitting that I had made a mistake. But did I learn my lesson? Not immediately. I doubled down on my investments, convinced that a change in luck was just around the corner. Spoiler alert, it wasn't. I continued to ignore the advice of those who had been successful before me, thinking that I knew best. It wasn't until I had lost a significant portion of my savings that I finally saw the error of my ways. I realized that I had let my ego get the best of me, that I had ignored valuable advice in favor of my own misguided beliefs. In the end, I had to swallow my pride and seek out the advice of those who knew better. I diversified my portfolio, set stop-loss orders, and took a more cautious approach to investing. And you know what? It paid off. I started to see my investments grow, slowly but surely, thanks to the advice of those who had walked the path before me. Well, besides the fact that pride comes before a fall, it's important to approach investing with a humble attitude and a willingness to learn from others. Don't let your ego get in the way of making smart decisions. And remember, even when you think you know it all, there's always more to learn. Number 2, economic downturn. I decided to start a small business right in the midst of an economic boom. Timing is everything, they said. Spoiler alert, timing is not everything. I had a brilliant idea for a business and a solid plan to make it happen. I poured my heart and soul, and a hefty sum of money, into getting things off the ground, convinced that I was riding the wave of prosperity. Business was booming, and I was on top of the world. But then, like a punch to the gut, the economy took a turn for the worse. The signs were there, but I ignored them, thinking that my business was immune to the ups and downs of the market. I was wrong. As the economy slowed, so did my business. Sales began to decline, and I found myself struggling to keep the lights on. I had invested everything I had into this venture, and now it seemed like it was all slipping away. But did I give up? Not a chance. I tightened my belt, cut costs wherever I could, and tried to weather the storm. I sought advice from experts, adjusted my strategy, and did everything in my power to keep the business afloat. It was a tough and humbling experience, but it taught me some valuable lessons about resilience and adaptability. In the end, I was able to survive the economic downturn, but not without scars. I learned the hard way that timing is just one piece of the puzzle when it comes to business success. Economic conditions can change in an instant, and it's important to be prepared for whatever may come. Well, besides the fact that the economy is like a roller coaster, with its ups and downs, it's important to approach business with a realistic mindset and a plan for the unexpected. Don't let success blind you to the risks ahead, and always be prepared to adapt to changing circumstances. And remember, even when the economy takes a downturn, there's always a way to ride out the storm. Number 1, personal issues. I decided to start a small business, fueled by passion and determination. Nothing can stop me, I thought. I poured my heart and soul into my business, working long hours and sacrificing time with friends and family. I was so focused on making my business a success that I didn't realize the toll it was taking on my personal life. As the pressures of running a business mounted, my personal life started to suffer. I neglected my relationships, my health, and my own well-being, all in the name of chasing my dream. I was burning the candle at both ends, and it was only a matter of time before I burned out. But did I listen to the warning signs? Of course not. I was convinced that if I just worked a little harder, pushed a little further, I could make it all work. Spoiler alert, I couldn't. Eventually, the cracks started to show. I was stressed, exhausted, and on the verge of a breakdown. My relationships were strained, my health was suffering, and my business was starting to falter. It was a wake-up call, a harsh reminder that success at any cost is not worth it. In the end, I had to take a step back and reassess my priorities. I realized that my personal life was just as important as my business, if not more so. I took the time to nurture my relationships, prioritize my health, and find a better balance between work and life. Well, besides the fact that success is not worth sacrificing your personal life, it's important to approach entrepreneurship with a healthy dose of self-awareness and balance. Don't let your ambition blind you to the things that truly matter. And remember, even when things seem overwhelming, there's always a way to find a better balance and live a more fulfilling life.